How's it going, everyone? My name's Sam. I'm coming over from My Financial Friend. I do videos here on TipRanks once a week with you, and we're coming in at a little bit of a different location today. Usually I'm right back there, but we're changing it up a little bit. Now, I want to talk to you about one of the most undervalued FAANG stock. So this is going to be a company that announces earnings next week. It's being valued less than all the other FAANG stocks, and it has significant upside. It's been growing like crazy. It's been beating earnings per share, the estimated earnings per share, 6 out of the last 7 earnings. So we're going to take a look at it here today. Now, before we do that, I like to go over what we did last week, what stock we looked at last week. Now, last week we took a look at Voyager. Now, this one's an interesting one because it actually went down significantly over the last few days. So since we talked about it last Thursday, it actually fell all the way down 28%. Now it's recovered a little bit, down 15%, but it's been flying the last 2 days. And it had a really good day of up 16%. Now it's about 18% up. And they actually announced preliminary results from the last quarter, and they went from 60 million in revenue up to 100 million in revenue. Actually 105 give or take because it's still unaudited. And they did that just from the last quarter. So they grew revenue about 60% or so. So that is huge growth. And because they announced that, it popped back up. The reason it's been falling is most likely due to the fact that crypto's been down. So that is interesting to take a look at. You know, the week before we had looked at Disney and it went up 6 or 7% since we had looked at it. So sometimes they go down, sometimes they go up, but anything can happen short term. So of course, I'm not a financial advisor. Always do your own research. There's going to be volatility short term in some of these stocks. Now, the company that we're looking at today definitely is not going to be as volatile because it is Facebook. Now, if you guys want to check out the TipRanks platform, you can check it out down below to see all the different stuff I'm going to use here today. Also, if you guys want, there is that like button down there. I really appreciate it if you hit that. So this is a 10 out of 10 smart score. As a strong buy, bullish sentiment, the hedge fund activity trend has increased. The only thing is they have a bearish news sentiment, and we'll discuss that. Now, we're going to go through some of these different tabs here to give you an idea on the company. So obviously, you probably know Facebook. However, Facebook owns WhatsApp and Instagram, Oculus. They own some other companies too. They have been consistently beating expectations. So going back to the stock analysis here, we can actually see that they have been outperforming quarter in and quarter out. So you can see down here, these orange bars are the reported EPS and the blue bars are the expected. The only time that they didn't beat over the last 7 quarters was actually here, and they were just short by 3 cents. So last quarter, they actually earned $3.29 as opposed to the $2.35 estimated. So they actually have their earnings next week. They have a market cap of $990 billion. They actually hit the $1 trillion club a few weeks ago. Their PE ratio is 29. And we'll take a look at that compared to some of the other FAANG stocks here in a second. But that is actually significantly lower than a lot of the other FAANG stocks. So we have the estimates for different analysts here. You can see a lot of them are saying buy with significant upside. We have buy with a little bit of downside. We have 1 sell. So if we look here, 33 ratings, 28s are buys, 4 holds, 1 sell, with the average upside being 12.06%. So analysts are thinking this is going to be a company that grows pretty significantly. Now, they do have some risk factors. This is where that bearish news sentiment comes in. People are very worried about regulatory risk. They're worried that there's going to be either some monopoly rule, or they think Facebook is going to be hurt as a company because of data protection laws, which really helps their ad business. So the fact that they can use people's data helps them target ads a little bit better. This is something that has been a risk for a while. It's going to probably continue to be a risk. Now, what's interesting here is the fact that almost every blogger is bullish on Facebook. So you can see blogger sentiment, bullish, 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 and then show more bullish, all bullish, more. We have 1 bear, and then you can keep on going. I was looking at this beforehand, and everyone seems to be bullish. So Bloggers are very bullish long term. Doesn't matter the site, whether it's Motley Fool, Seeking Alpha, Investor Place, The Street, everyone is bullish, it seems like. Now, insiders are selling, but you can see quarter in and quarter out, there are way more sell transactions than there are buy transactions, even though the price is going up. But you know who that's most likely from? Mark Zuckerberg. Uninformative sells. So a lot of the time these company executives set up sells because they don't want all their net worth in one company, especially the company that they work at. So if something goes wrong and maybe they get fired, or if something happens to them, that could be really bad for their portfolio if they lose their job and the stock goes down. So Mark Zuckerberg has a lot of uninformative sells, and he's done this a lot. So you can see here he's selling about $26 million worth pretty consistently every few days, actually. So there are a lot of sells, but they're really from Mark Zuckerberg, and they are large transactions that he makes consistently, just getting some of his shares out. Now, there is the news next week of their earnings. Let's take a look at what we should expect from them. So over the last couple months, they have gone up in price a significant amount. We saw last year them fall all the way down to the 150 range with the pandemic, and now they're at 350. So they've made a very nice comeback. After the last earnings report, they blew out earnings, and they went up pretty significantly. So they went up and went into the 300s. Now, what are we going to expect? Well, if they beat earnings again, that would be pretty on par for what they've done in the past. The thing is, they are consistently growing. Of course, there are some quarters that are higher than others. A lot of that is cyclicality due to ads, right? A lot of companies want to run ads before Christmas. A lot of people want to use their ad budget. So that does cause cyclicality in their earnings per share. We are expected to hit $3.04 in earnings, but we'll have to see next week how that actually goes. If you want to know their revenue, you can see here that they have been growing revenue. They had about $26.17 billion worth of revenue last quarter. Typically, we do have a good amount of fluctuation in price too after they have their earnings, because you can see here one day before earnings, one day after earnings, went up 8.54% last quarter. The quarter before that went down 6%. Quarter before that, not much fluctuation in price, but you can see 9%, 12%. So there are wild fluctuations in price when they end up announcing earnings a lot of the time. You can see here that Facebook has a 29.3 PE ratio as opposed to 33 on Apple. Google has a 33.6, Netflix 64, and Amazon 68. So you can see Facebook does have the lowest PE ratio of all these companies. It is a strong buy, while Apple and Netflix are only moderate buys. So you can see that it is also the smallest market cap, excluding Netflix. There is significant upside, at least a lot of people think there is significant upside to Facebook long term. Facebook does have a very strong balance sheet with about $64 billion of cash and short-term investments. And that's with only about $12.7 billion in total current liabilities. Now, total liabilities are about $30 billion, but when you consider the fact that, hey, they could pay off all their liabilities and still have about $35 billion just in cash, that's a very significant amount. So thank you guys so much for watching. I appreciate you guys hitting the like button and checking out the links down below to TipRanks. Thank you. You can follow me on my channel on My Financial Friend on YouTube. And I will see you guys in the next video. Bye.